And now, International Money Laundering Abatement and Financial Anti-Terrorism Act of 2001. Title the Third of the USA Patriot Act, legislation designed to prevent terrorists and others from using the U.S. financial system anonymously to move funds obtained from or destined for illegal activity. It authorizes and requires additional record-keeping and reporting by financial institutions and greater scrutiny of accounts held for foreign banks and of private banking conducted for foreign persons. The law requires financial institutions to establish anti-money laundering programs and impose various standards of money transmitting businesses. It amends criminal anti-money laundering statutes and procedures for forfeitures in money laundering cases, and requires further cooperation between financial institutions and government agencies in fighting money laundering. And now, Sarbanes-Oxley Act of 2002. Sarbanes-Oxley Act established the Public Company Accounting Oversight Board to regulate public accounting firms that audit publicly traded companies. It prohibits firms that audit publicly traded companies from providing other services to the companies they audit, and it requires that CEOs and CFOs of the publicly traded companies certify their company's annual and quarterly reports. The Act authorizes the Securities and Exchange Commission, SEC, to issue rules governing audits. The law requires that insiders may no longer trade their company's securities during pension fund blackout periods. It mandates various studies, including a study of the involvement of investment banks and financial advisors in the bookkeeping and record-keeping scandals that motivated an enactment of the legislation. Also included are whistleblower protections, new federal criminal laws, including a ban on alteration of documents. Now then, the check clearing for the 21st Century Act. The Act directly affects insured depository institutions and their customers by providing a federal statutory framework for electronic check processing. The Act allows an original paper check to be removed from the check collection or return process, an image of the paper check to be transmitted electronically. The Act also allows the transmitting bank to create a substitute check, which contains the electronic picture and payment information if a receiving bank or a customer requires a paper check. Now then, Fair and Accurate Credit Transaction Act of 2003. The Fair and Accurate Credit Transactions, or FACT, Act contains extensive amendments to the Fair Credit Reporting Act designed to improve the accuracy and transparency of the national credit reporting system, to prevent identity theft, and to assist victims. It contains provisions enhancing customers' rights in situations involving alleged identity theft, credit scoring, and claims of inaccurate information. It requires companies to notify consumers who receive credit on terms that are materially less favorable than the most favorable terms available to a substantial proportion of consumers of the company. The purpose of the notice is to alert consumers to the existence of negative information on their consumer report, so that the consumer can check their consumer report for accuracy and correct any inaccurate information. Companies that share consumer information among affiliated companies must provide consumers notice and an opt-out for sharing of such information if the information will be used for marketing purposes. Now then, the Federal Deposit Insurance Reform Act of 2005. The Act requires the merger of the Bank Insurance Fund and the Savings Association Insurance Fund into the Deposit Insurance Fund. The Act also increases the coverage limit for retirement accounts to $250,000 and indexed the coverage limit for retirement accounts to inflation as with the general deposit insurance coverage limit. The Act also granted the FDIC Board the discretion to price deposit insurance according to risk for all insured institutions regardless of the level of the reserve ratio. Soon after enactment, the Federal Deposit Insurance Reform Conforming Amendment Act of 2005, February 15, 2006, was passed. This act provided amendments that were necessary for the complete implementation of the Federal Deposit Insurance Reform Act of 2005.